There is no AI bubble. Will there be one day? Maybe, probably. We tend to overexpand in everything. So I'd say at some point we'll get there, but that could be a half a decade from now. We're definitely not there right now. I'd be looking at these stocks that just got crushed. They're poised for a snapback. I think we put the bottom in the near term on Friday, and we're off to the races into the end of the year.
I mean, Google ripping today. I saw a story that Google is in talks to offer its AI chips to Meta, NVIDIA, and AMD.
Yeah, look, and NVIDIA is selling off on this, which is insane, because the reason why there are new entrants to the market is because there's not enough supply for NVIDIA's GPUs, right? And once we go from the era of the large language model to the agents and the applications, the demand for compute or chips from Google, Marvel, AMD, NVIDIA, and anybody who can make them, okay, is going to explode on an exponential basis. So there's so much more to go.
Yeah.
Okay, that's good news for Google. But Ray, this is sending NVIDIA stock way down. Why would Meta go with Google?
There's a lot of reasons, and one of the reasons are TPUs are purpose-built for AI deep learning. And what Google has are these AI chips. They're tensor processing units. They're lower TCO. They're more power efficient, and it actually does deliver some more punch for less. And I think that's really why they're looking at it. And plus, they're also looking at diversifying their chipsets, right? They don't want to get everything all from NVIDIA, and so Google's making the case to go do that. But the market shouldn't overreact. There's a $7 trillion market for AI chips by 2030. So it's not really going to impact NVIDIA or AMD. And I would say you should take advantage of this opportunity to buy the dip, because this is a long-term game and there's going to be chip demand for 5 years to come. I mean, this is not a short-term thing that they're talking about here.
Think about this. A month ago, Anthropic, they said, we're going to extend our use of Google's cloud, their TPUs. Now, remember, we used to do CPUs, then it's been GPUs, NVIDIA. Now TPUs have entered the conversation, and there's major scuttlebutt that Meta's going to make a major purchase. Shares of Alphabet, Google have been absolutely on fire, through the absolute roof. In the meantime, NVIDIA shares are falling out of bed. Now, my next guest has actually recommended both stocks on this show. So I want to bring in now stockbrokers.com, the Director of Investor Research, Jessica Inskip. Let's start with Google first. I mean, explain, was it maybe 7 months ago? This was the loser. Search was going to lose to AI. Everyone was dumping Google. How did they turn it around this fast?
Yeah, well, you remember, Bart, as well, a lot of it is the vibes and the marketing aspect and the way that the market feels about it. So there is search resilience, and we can see Google's model really playing out. Generative AI has been adopted. There's Gemini 3 momentum, which is wonderful to see. But it's cloud growth that we really want to pay attention to. And part of that has to do with those TPUs as well. And I've been privy to this. I've personally gone to Google's campus and understood what they're doing with Google Finance, and really see the great things that they're doing. And that is also utilizing their aspect of social media. And that translates into consumer sentiment. There's a lot of interesting studies we can do there. But what I think we should focus on is Google has integrated NVIDIA's entire software stack into their cloud. That's not what you do to a competitor that you're about to kill. Google is a partner with NVIDIA. Google is a competitor with NVIDIA, but Google is also a customer with NVIDIA as well. There is room for everyone at the table because the total addressable market is absolutely huge. There's so many revisions, absolutely.
So we know, okay, TAM is huge and it keeps growing day by day. But the narrative right now, this week and today especially, is that these TPUs will somehow dethrone NVIDIA's chips. Now, you say that's not the case, and you lay out a whole lot of reasons for that. So would you still be a buyer holder of NVIDIA?
Absolutely. Absolutely. And I can tell you why for a couple of reasons. And that does have to link with Google, and because this is the reason why. And it also reminds me reminiscent of when we were talking about DeepSeek and there was a sell-off on NVIDIA because we thought there was a competitor. Google, the cloud platform specifically, hardware agnostic. So customers, you're not going to make customers adapt to you. You're going to adapt to them. And that's essential in a world where enterprises really want flexibility and they don't want to force architecture choices. And why would you do this? Because customers have different needs. So, and it has a lot to do with CUDA and the CUDA stack. So our research lab may need NVIDIA's CUDA stack. They choose GPUs. Startup training might need Google's TPUs because of the performance and the cost. So they choose that. You might need Intel, AMD. Google offers every bit of that, but CUDA is the moat that's around NVIDIA. CUDA has a 17-year head start. NVIDIA launched CUDA back in 2007, long before this big AI boom, and it's the operating system of this AI era. So switching off of it, it's almost impossible for developers, enterprises, hyperscalers, and that's what.
Right.
That's what's very important for NVIDIA.
And by the way, just another note, we had a thing here, NVIDIA put out this memo saying that they're not in Iran last night. That's not helping the stock at all either. But I want to switch gears because let's talk about NVIDIA for a moment, right? Of course, the Michael Burry short, that battle going on. I think they made a huge mistake with we're not in Iran. Maybe you're protesting a little bit too much. But how are you feeling about this name?
We actually just upgraded it and added it very small to ICAP, which is our large cap dividend fund that does have
So you think it's a buy here?
Absolutely. We raised our target to 260. We're very target focused. So like with Broadcom, we have a 380 target. We just lightened up on it. So the targets usually work, particularly after earnings, very, very strong earnings. We raised our target and it came off. So we think that this reaction is overdone.
Meta said to be considering spending billions on Google AI chips, according to a new report from The Information. The report adding Google is aiming to capture 10% of NVIDIA's revenue with its TPU business, pitching its chips as more secure and cost-effective. Shares of NVIDIA, which currently supplies Meta's processors, dropping 2.5% on the report, while Google parent Alphabet closed at an all-time high. Meta, meantime, up almost 4% for its best day since July. What's interesting, and I'm going to point to Dan for this one, is that we've been talking about this possibility of all of these hyperscalers developing their own chips and the possibility of them selling these chips to others and not needing NVIDIA or AMD or these other guys anymore.
Yeah, they've all been dying for a second source, and they've been in this, kind of arms race over the last 3 years or so. So Google has kept its head down. We were talking about Google yesterday, building and working on Gemini, and again, out of the gate, it wasn't particularly great. They still buy NVIDIA GPUs, but like all of the other hyperscalers, they've all been looking again to diversify away from NVIDIA. So don't think for a second this is not going to weigh on NVIDIA. A lot of stuff that Jensen said on that call last week, it's been picked apart a little bit. It almost felt like it was kind of ringing the bell a little bit at the top. And I don't mean like the NVIDIA story is over, just there's plenty to go around, it looks like, at this point.
I guess I just get back to the fact that I don't think it's an expensive stock. I mean, I understand there's an incredible amount of hype, and the things that are most easy to attack are the speculation about whether people can find alternative sources. The biggest things I think we're talking about in the aftermath of the earnings are this question about inventories and where they are relative to history, except for given the growth, are the inventories really that outsized given how much faster they are growing than the historical average? The second is really just whether there's a story around the circular nature and the receivables coming back to them by those companies that they've invested in. And that's, there's a lot of pushback on that I can't really, I can't challenge, but I just get back to a multiple on a company that I know is in every conversation, but it's not expensive. It's cheaper than it is on a 10-year. I mean, how can that be something that we're, that scared about? I just don't get it.
There's a part of the report, though, that outlined why NVIDIA made a $100 billion investment in OpenAI. And what it implied was that after it was known that Alphabet was talking with OpenAI, NVIDIA stepped in to lock them in, which sort of, it shows maybe they're a little bit scared, a little bit desperate. Yeah, desperate.
Or good business. I mean,
whatever it is.
No, but I think you make an excellent point. The fact that NVIDIA went to Twitter today to sort of defend this whole thing about Google chips and Facebook and NVIDIA, that to me is a little concerned. Look, Tim's right about, he's absolutely spot on. Here's the problem. If competition is coming faster than people realize or think can happen, 75% margins are going to be a thing of the past sooner rather than later, and that takes the valuation, which is reasonable, into levels which might not be as reasonable.
I mean, it's ever thus. The question is, these are loved, and then all of a sudden they're out of favor, and now they're back in favor. The valuations are in question. Ultimately, is this AI, is it, you hear second inning, you hear ninth inning? It's unknowable, and I think you just have to pick your stocks.
Which brings me to why I'm doing this. The contretemps between NVIDIA and Alphabet, with Alphabet de-emphasizing NVIDIA's chips by relying on its own chips made by Broadcom. Those chips are supposed to be so good that Meta, a competitor, is actually said to be contracting with Alphabet to get its hands on them, perhaps so they can replace the same high-priced semiconductors from NVIDIA. Well, in this news, NVIDIA stock has had the living daylights kicked out of it. Alphabet had been a huge client of NVIDIA, and the press clips say that it's going to adopt its own chips far more than the ones owned by NVIDIA. Alphabet stock has been as hot as NVIDIA stock is now ice cold. It got colder last night when a tech publication reported that Meta is willing to buy these same chips from Google at a considerable savings. Perhaps there could be some license agreement that includes Broadcom, the general contractor for Google's chips, as Broadcom CEO Hock Tan is on the board of Meta. Now you could argue, so what? NVIDIA's got a ton of business, but NVIDIA just reported what seemed like a bang-up quarter. Instead, well, guess what? The stock got banged up. Injured reserve style banged up. NVIDIA was at 186 before the quarter, but then it fell to 180 after its report. Today, it dropped further to 177 on this Meta news, down $4.73. But it did fall as low as $169. Now, considering it traded at 212 at the end of October, 169. I mean, that is quite an amount of loss.
The House of Payne.
Let's add a few more indignities to the story of NVIDIA. Meta jumped nearly 4% today because investors bought the stock hoping that these new chips from Google could lead to better gross margins for Meta. That's another Mag 7 about to make a comeback as it benefits from not having to spend a lot of money with NVIDIA, at least the critics say. Now, you could argue that all this is just inside baseball if it weren't for the fact that, well, let's say a couple of other facts. First, the super large customer of NVIDIA, another one is OpenAI. And that's been the subject of stories about a seemingly precarious balance sheet. Insult to injury, there are short sellers circulating with what I regard as dubious condemnations that include linking NVIDIA to companies with fraudulent accounting that amounted to criminal enterprise. There are people saying that NVIDIA is the next Enron, which I've got to tell you is categorically absurd. So why not just dump NVIDIA if you can't take the pain? All right, I play with an open hand for my trust. So I want to explain why I won't give up on this one. I want to explain why I say own, don't trade the stock of NVIDIA. First, historically, it's been a bad idea to dump any of the Mag 7 out of fear. We sold Google for the charitable trust at a considerable gain, but we left a darn double on the table. I thought Google would be hobbled by antitrust woes and a judge who seemed bent on punishing it as a monopolist. Instead, the judge changed his mind and blessed the company, including the $20 billion payment to Apple to be the sole built-in search provider. I thought the Gemini, their AI product, would cannibalize Google's amazing search margins. No, it complemented them and enhanced them. The only reason I'm not kicking myself is we took our profits from Google and invested them in Broadcom, which has been a really outstanding performer. Still, it was a mistake to throw in the towel because of fear. And you know what? I feel the exact same way about NVIDIA, and I've been thinking about this nonstop since they reported. See, these near-term concerns, they got some validity, of course. I'm not denying them. So did the antitrust action against Google. They most certainly matter, just like the possible cannibalization of Google by Gemini. For all we know, this may be the beginning of the end of NVIDIA's AI dominance. I just don't see it like that, though. With the exception of the bogus accounting charges that I won't even dignify with a response. I wish NVIDIA hadn't alluded to them either, by the way. I think their problems are not insurmountable. In fact, these remind me of the same problems I've heard all the way up from when I liked NVIDIA when it was just a several $100 billion enterprise instead of the $4 trillion enterprise it is today. I saw so many people leave the stock for so many other reasons that are just like these. That's why I say own it, don't trade it, NVIDIA. So the bottom line, if you don't like NVIDIA, you don't have to own it. Nobody's putting a gun to your head. But let me give you a little coda here, because I'm kind of angry about this. Here's your hat. What's your hurry? And don't let the door hit you on the way out of NVIDIA.
All right, I hope you're all doing well today and staying calm in this market. As we discussed in last night's video, The Information published an article yesterday in After Hours claiming that Meta is in discussions to use Google's TPUs as soon as 2026, and also to potentially add Google TPUs to their own data centers in 2027. There's been a lot of talk online in recent months about Google preparing to offer their TPUs to customers rather than just using them for their own internal workloads at Google. And so, while I'm always hesitant to believe anything The Information reports having to do with NVIDIA-related rumors, given their track record, perhaps there is some some merit to this article. Also, I'm sure many of you are aware of Google's Gemini 3, which launched recently, and that it was trained exclusively on Google TPUs rather than NVIDIA's GPUs. Jensen actually mentioned Gemini 3 on NVIDIA's recent earnings call, saying that he saw a text from Demis of Google DeepMind saying that pre-training and post-training are fully intact. Gemini took advantage of the scaling laws and received a huge jump in quality and performance. In other words, the more compute you use, the better your models become, and that is good news for NVIDIA, even though Gemini was not trained on NVIDIA hardware. I think that the selling of NVIDIA stock in light of the report from the information is the wrong read of the situation. I view the pullback as the market reacting to a headline without fully considering the implications. Let me ask you a few questions. Is the world still compute constrained? It absolutely is. Will NVIDIA sell whatever they can produce in 2026? They most likely will. Will NVIDIA sell whatever they can produce in 2027? They most likely will. The reality is that companies today, including companies like Meta, simply cannot get enough compute. The world is severely compute constrained in the face of very strong AI demand. Let me ask you another question. Will the total addressable market grow over the next 5 years? The answer to that question is almost certainly yes. And so if the total addressable market is going to grow larger and the world continues to be compute constrained, then there's plenty of room in this market for companies like NVIDIA, AMD, Broadcom, and others to all succeed as there is such strong demand. And so again, I think selling NVIDIA on this news is the wrong read of the situation. I don't view the success of Gemini 3 or the success of Google's TPUs as a major problem for NVIDIA at this current moment. I'll briefly revisit the topic of GPUs versus custom ASICs in case someone isn't familiar with what's going on here. To give an analogy, you could think of an NVIDIA GPU as a Swiss Army knife. It's very versatile across a wide range of tasks, while at the same time, it is not the absolute best option for certain tasks. On the other hand, you could think of a custom ASIC, such as Google's TPU, like a scalpel. It's not versatile, but it is highly efficient at the specific workloads it has been optimized for. And notice that there are use cases for both. As I've said in the past, Google is a great example of a company that uses both their own custom ASICs and NVIDIA's latest systems. Even though Google uses their own TPUs for their internal workloads, they also continue to invest heavily in NVIDIA's latest systems to then offer that capacity to their cloud customers. NVIDIA systems are a great option for cloud providers because they're versatile across a wide range of tasks, allowing cloud service providers to serve a wide variety of customers. All of that to say that I don't view the success of Google's Gemini 3 or the potential for Meta to start using Google TPUs as a major deal breaker for NVIDIA. There is plenty of room in this market for multiple companies to succeed, and that will most likely be the case for some time. As I've mentioned in recent videos, I don't think that NVIDIA is overvalued here, not at all. I know some well-known short sellers have recently compared NVIDIA to Cisco in the dot-com bubble, but the two are very different from one another. At the height of the dot-com bubble, Cisco was trading at a triple-digit forward PE multiple. Today, NVIDIA is trading at a forward PE in the 20s. That is not egregious at all. That's basically a market multiple. And if NVIDIA's earnings turn out to be better than what analysts are expecting, which is usually the case, then that would mean NVIDIA is even cheaper than that. Given all the talk about GPUs versus TPUs over the last 24 hours, I want to simplify things so that we're not distracted by the noise. Think about this. NVIDIA's valuation moves higher as their earnings grow. And going back to the questions I asked earlier, will NVIDIA sell whatever they produce in 2026? Will they sell whatever they produce in 2027? Will the total addressable market continue growing as the world is compute constrained? The answer to all of those questions is almost certainly yes. And therefore, NVIDIA's earnings should continue growing at a strong clip. And if earnings continue growing at a strong clip and NVIDIA's valuation moves higher on their earnings growth, then the stock should continue to move higher as well. I don't know what the stock will do in the short term, and we should always be prepared for potential pullbacks. But from a long-term perspective, I seriously think that NVIDIA still has plenty of runway ahead of it. I don't think it's overvalued here. And I don't view the TPU situation as a major deal breaker for NVIDIA at all. Looking ahead, NVIDIA is set to present at the UBS Global Technology and AI Conference on December 2nd at 6:35 a.m. Pacific, 9:35 a.m. Eastern. This event will likely have an impact on how NVIDIA trades in the short term, given that the event is geared toward the financial community. I continue to think that most analysts are underestimating NVIDIA's long-term growth. Of course, I expect NVIDIA's data center business to continue growing strong as the world is compute constrained in the face of very strong AI demand. I also think that most analysts are not adequately factoring in growth from some of NVIDIA's other business segments into their long-term estimates, especially physical AI. There's a reason why I keep talking about NVIDIA's physical AI business, and NVIDIA CFO nailed it on the earnings call when she said that physical AI addresses, quote, a multi-trillion-dollar opportunity and the next leg of growth for NVIDIA. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. This is not getting enough attention, but I think it will get a lot of attention in 2026 and 2027. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack, and this is not getting enough attention. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.